Dramatic week for central bank policy this week, and we'll be going over all the rate hikes and what's next for central banks. In particular, how does monetary policy affect the cryptocurrency space, and what's going to happen to your wallet post Ethereum Merge? We're here to discuss all these topics with an expert on both monetary policy and cryptocurrencies with Benjamin Cowen. He is the founder of Into the CryptoVerse, a huge channel online, a lot of followers on Twitter. Big following. Ben, welcome to the show. It's your first time on Kitco. Welcome.
Yeah, David, thanks for having me. It's a pleasure to be here. I've watched your show for a long time now, so thanks for inviting me on. Thanks for the introduction. I don't know if I would call myself an expert at monetary policy, but I'm trying to definitely learn.
You're a very humble person, Ben. That's what we like about you. But you are an expert. You've got a lot of good things to say, and you've got a lot of interesting research that we'll talk about. But first, let's start with monetary policy. Let's start with the news of the week. So a lot of rate hikes coming in from the major central banks all around the world. Bank of Canada today, 75 basis points. ECB, 75 basis points. Australia, earlier in the week, 50 basis points. Norway, 50 basis points. And the Bank of England next week expected 75 basis points. The Federal Reserve expected 75 basis points at their next meeting as well. Hawkishness all around the world. Let's start by talking about impacts on the U.S. dollar.
Yeah, so I mean, clearly the general idea is that the dollar, the U.S. dollar currency index is poised to continue. I would say to stay bullish. Choppy to bullish is my general bias right now on the U.S. dollar, with the Fed continuing to remain hawkish, especially going into the end of the year, and probably will stay hawkish for a good part of next year too. I think it will put a lot of downward pressure on risk assets in general, and of course that does include cryptocurrencies. I think there are a lot of people who assume that the Fed will pivot because that's what they historically do. If you look at really the last 20 years, the Fed is really quick to pivot when markets are not really doing that well. However, high inflation this time, I think, is going to really keep them from pivoting as quickly as a lot of people would like. So I certainly would not be surprised to ultimately see rates continue to go up for months to come. And then once they get to those elevated rates, I expect them to stay there, more or less exactly what they've been telling us for the entire year, right? I expect them to stay there for a while until inflation starts to come back down.
Will it come back down? The Fed's aiming for 2%, back to 2%. What do you think? Is that going to be achieved?
Yeah, it's a tough topic because the best cases we have to look at are in the 40s and the 70s, and both of those ended up being inflationary decades. And I think that's the biggest fear that the Fed has right now, is inflation becoming entrenched. To some degree, the expectation of high inflation can keep inflation high. People just keep raising prices, and things will wage inflation. These things can just continue to go up, and I think that is what they're trying to avoid. So, I think that inflation will probably stick around for a while. I believe that Powell is trying to learn from the mistakes of the past where they pivoted too quickly, and a lot of market participants, I think, want the Fed to pivot sooner rather than later. But if history has taught us anything during periods of high inflation, it's that a premature pivot is only going to drag the pain out for a lot longer and for many, many years. I mean, if you look at the 70s and if you look at the 40s, the stock markets were relatively flat, and they were choppy a lot during that time, sometimes putting in new highs, but not really going that much higher. And it wasn't until inflation really started to come down that the market started to move back up. So I'm hopeful that they will continue to raise rates and to keep rates high to get inflation back down. But I don't think inflation is going to just come straight back down to 2%. I don't think it's going to be a linear path down. It'll probably be somewhat choppy. And I think the question on will they get it back to 2% quickly, it's ultimately going to depend on if they have the resolve to keep interest rates elevated, right, like they need to.
I want to link this back to the markets, ultimately the core of our conversation today. And I want to talk about specifically the crypto markets. The crypto market sell-off that started last November, how much of that was due to monetary policy alone?
Yeah, I think a good bit of it is. I mean, you could also look at just general crypto cycles as well. You know, it makes sense for the bull market to last for a while and then go into a bear market. But certainly, I do think that you could argue that some of the bull market was somewhat mitigated or tempered by the Fed becoming hawkish. And it wasn't until interest rates year over year, or sorry, it wasn't until inflation year over year really was getting to say like 6% or so, 6%, 7%. I think market participants started to think, wait, hold on a second. This means the party's about to be over with the Fed and QE, because we simply cannot continue to print money. We can't continue to print money while inflation is continuing to go up. So I do think it had a big impact into the bear market we're currently experiencing.
Okay. A lot of people have noticed, yourself included, that the tight correlation between the cryptos and the stock markets have not been broken this year or last. Historically, they've had a correlation. And in particular, this bear market, it just seems to be too much of a coincidence for both markets to be falling in tandem. How would you dissect that price pattern?
Yeah, I mean, I think they are highly correlated. You can look at various timeframes and say they're not correlated. I did some analysis at one point and looking at Bitcoin bear markets and comparing it to like the S&P 500 and the NASDAQ. And if you look at historic bear markets, there have been Bitcoin bear markets where the S&P was actually in a bull market, or the NASDAQ was actually putting in higher highs. So like there was a time when it was negatively correlated. There was a time when it was positively correlated. And there was one bear market where it wasn't really correlated at all. This bear market, they are highly correlated. And it seems to me that crypto just sort of acts as a more volatile version of say tech stocks. If the NASDAQ is dropping 3%, then usually crypto is dropping 5%. So I don't think we're getting away from that right now. I think they're very much highly correlated.
Okay. And this correlation, is that a definitive part of crypto's DNA, you think? Or at some point, people are talking about a divergence when the two asset classes are viewed as completely separate from one another? What's going to happen?
Yeah, I know that is a theory. I'm sort of in the camp that at least for now, for the foreseeable future, they will remain fairly correlated. So if you think about it, Bitcoin bull markets are often associated with things like the Bitcoin halving and whatnot. And I do think the Bitcoin halving plays an important role, but it's also related to cheap liquidity, right? Access to capital. And that's really good for risk markets in general. So if the S&P were to bottom and start moving back up, I would assume that crypto would do so as well. I mean, you could go into the idea that potentially Bitcoin could become, could behave more like, say, gold or something if it goes more, say, like a store of value type narrative over the long haul. But for the next several years, I think they're still going to move mostly in tandem.
I know you've talked about this in your own analysis. Let's compare this current bear cycle in cryptocurrencies to past bear cycles. What are the similarities? What are the major stark differences you found?
Yeah, sure. So there's a lot of different indicators that I look at, and one of the ones is this chart here. It's just the market cycle peak ROI. So we're just looking at basically the return on investment to the downside, of course. If looking at where we compare to the peak in November. And so the green line is the current bear market, and you can see the red and orange lines are the 2014 and 2018 bear markets. And there's also the first bear market that was looked a lot different than any of the ones we've seen recently. And there's been a lot of chatter this bear market about how this time is different and it feels very different. And to some degree, the macro is different. I mean, we haven't had high inflation since Bitcoin has been around. I mean, we've never seen inflation at 9.1% year over year since Bitcoin has been around, and we had to go back 40 years to see something like that. But so far, this bear market is more or less in line with what we saw in 2014 and what we saw in 2018. And it was after about this amount of time, Bitcoin was sitting about 60 to 75% down from the all-time high, and then spent a few months in this range before finally putting in a major bottom. So in terms of just measuring it from the peak of November, it's really like the exact same thing that we've seen a number of times before. The only counterpoint I think some people might try to make, and I'm not saying it's not a valid one, but it's to compare the peak from April rather than November. If you were to assume that April was a more technical top, then you could say that this bear market has already lasted longer than the two prior ones. However, it has not gone down nearly as much as the two prior ones.
There's a lot of different economic theories as to why asset classes behave the way they have. Some people subscribe to the Elliott wave theory, for example, and basically say that it's inevitable that things will act in cycles, secular and or otherwise. Other people say that assets only react to certain economic and or financial conditions. Cycles don't need to happen. It's only when things in the macro landscape happen that assets react accordingly. My question to you, and I know you're a quant, I know you've got a PhD in engineering, what's your view on how assets behave, generally speaking? We'll tie that to the crypto universe. Do cryptos need to act in cycles, is my question.
That's a good question. I mean, I don't think anything necessarily has to happen. If you were to ask me, I mean, we're going to have a lot of Bitcoin halvings, right? Going all the way out to the 2100s. I don't think that we're just going to have a bull market on repeat every few years. I'm sure things will get a little bit more complicated than that. If you look at what we've experienced so far, Bitcoin has performed very cyclically. I mean, every few years it has a bull market and then it goes back into a bear market. And the halving, I think, is what people point to. But again, I think there are a lot of elements to the macro needs to look good too. So far, it seems like the macro is sort of aligning with, like the Bitcoin bear markets is aligning with the macro a couple years after Bitcoin's halving. I've always wanted to know, like, what would happen if we were in a period of high inflation and the Fed is going through QT, and we're also at the point in Bitcoin cycle, say like right after the halving, like what would that look like? Maybe you would have a bull market, but maybe it's a tempered bull market because the macro isn't aligning in the way that it has been over the last decade. So I would say I'm a believer in both. I mean, I do think there are elements to the cryptocurrency cycles. We've seen them play out multiple times. But I also think that at the end of the day, the Fed has to play ball. And they always say, don't fight the Fed. And I think it's true. If the Fed doesn't provide cheap liquidity to the markets, then you should assume that it will be difficult to see new highs.
It's hard to find another asset class that has so consistently in its history risen a certain X percentage and then dropped a certain Y percentage quite consistently over a certain number of years. I mean, it just seems to me like if you were to extrapolate history going forward, Bitcoin would need to then rise double digits again in the next bull cycle and then crash another double digits again in the following bear cycle. Or do you think at some point this cycle will stop?
Well, to some degree, we are seeing diminishing returns and also diminishing losses. Historically, if you look at the first several bull markets, like so the first bull market, Bitcoin went up about, I mean, from the bottom to the top, I think it went up about 600x. The second one was 500x. The third one was 100x. The fourth one was, a little over 20x, maybe like 25x, somewhere in that ballpark. But actually, the last two bull markets, to some degree, have been tempered to the tune of about 1/5. If two bull markets ago we went up 500x, or three, and then two bull markets ago we went up 100, and then this last one we went up 20x. To some degree, we are seeing diminishing returns, but in the same way, we've been experiencing diminishing losses as well. If I were to just quickly show the Bitcoin chart here, and we were to take a move between these losses, the first bear market was about a 95% drop. The second one was closer to about an 87% drop. And then the third one was closer to, I believe, about an 84% drop. So you can see that we are experiencing diminishing losses in the same way that we've experienced diminishing returns. And I believe so far this bear market, we've gone down to the tune of about like 75% or so. So there is still potentially room for us to have another leg down and still maintain the idea of diminishing losses.
Leg down to which level, Ben?
Yeah, it's a good question. I mean, a lot of people are sort of wondering, like, where is the Bitcoin bottom? And I spend a lot of my time trying to figure that out.
Okay.
And there are some, there's a lot of indicators that I've looked at over the last several months to try to figure out, is the bottom in or is it not in? So let me just show you a few of the charts that I'm looking at, so you can kind of look at the same thing. Some of the charts that I think are the most interesting are things like the supply and profit and loss. And one of the interesting things about this chart is that historically, Bitcoin does not bottom until after they cross. They crossed yesterday. For the first time this cycle, they crossed yesterday. And you can see a very cyclical pattern here for the Bitcoin supply and profit and loss. I mean, the bottom occurs after they cross. And, when it comes up here, that's generally the time where you want to scale out, when it's, when we're continuing to push those new all-time highs. So to me, this is an indicator that would suggest that if we did get another leg down, there's a lot of evidence that could be a major bottom, right? I mean, this is one of the indicators that we could look towards. There's another indicator that I've looked at, and this is the running 1-year ROI. This is an indicator that it basically just shows you what essentially the ROI is had you bought Bitcoin 1 year ago. And what you'll notice is that it tends to bottom at about 0.2 or so. Every single bear market, it bottoms about 0.2. And right now, the 1-year ROI on Bitcoin is 0.412. So let's just put out a couple numbers here as we go into the end of the year. So I can make a future projection and say, okay, well, maybe on December 9th of 2022, I think the price of Bitcoin could be $15,000. And if you apply it, it'll show you what the 1-year ROI would look like under that circumstance. And then you can start to play around with, does it look like it makes sense? Could that be the capitulation event? Let's put in, say, 13,000 and see what that looks like. It really starts to get down to what we've seen as historic bottoms. If we go down to, say, 11,000, it would look identical to the prior bear markets, right? It would basically look identical if we saw a final capitulation event, closer to the end of this year. And that sort of goes back to that first chart I was showing you with the, comparison of the various bear markets. We spend a few months sitting at about 70% down from the all-time high. And then it's like at the end of the year or early the following year, we get that final capitulation. So this is another chart that I'm looking at. So there definitely are some reasons, I think, to be cautious, not only from a cycles perspective, but also from a monetary policy perspective, with the Fed raising interest rates into a slowing economy. It leaves some reason to be somewhat cautious. But I just to always provide a question mark in my mind, I know there's no such thing as a sure thing in these markets. Yeah. I've tried navigating these markets as best I can for a number of years, and to varying degrees of success. Sometimes I think I get it pretty right, and then other times I don't get it right. So to just provide a few pieces of evidence the other way, if you were to look at other things like, say, the hash ribbons with price momentum, they've only ever previously crossed after the bear market was over. If you look at 2011, it crossed after the bear market was over. The same thing occurred in 2014 and 2015. And then in 2018 and 2019, we flashed it when the bear market was over. And just a couple of weeks ago, it flashed again for the first time this bear market. So there's, I'm looking at about 25 or 30 different bottoming indicators for Bitcoin. And I would say about 60% of them, or maybe a little bit more, are saying that the bottom could be potentially in, but there still are a few stubborn ones that say we need another leg down.
Mm-hmm. Okay. And do you think this leg down will be driven by certain macro events? Do you think it'll be a coincident indicator or a coincident price pattern rather to the stock markets? Or do you think that, again, going back to the hypothetical example I drew earlier, that if nothing happens, Bitcoin will just continue falling on its own?
Yeah, I mean, I think to some degree, if the stock market's dropping, we would expect Bitcoin to drop. Sure. I mean, at the end of the day, we can expect that. So then I guess the question is what's going to cause the stock market to drop? I think the biggest unknown right now is, are market participants pricing in the Fed keeping elevated interest rates for a long time? I think, and this has shifted, I think, a lot, even over the last few months. People are constantly changing their minds. The markets are constantly changing their minds over what they think the Fed's going to do. Not that long ago, a lot of people were talking about how September was only going to be a 25 basis point rate hike or a 50. And now it seems like the market is fairly confident it's going to be a 75 basis point rate hike. And a lot of people think that we can't go above 3.5%. What happens if we go to 4 to 4.5% or even higher? So I think something like that, where if market participants finally understand that the Fed will remain hawkish until inflation is back down closer to their target of 2%, that could lead to another leg down in the stock market. So, I mean, if Bitcoin were to see another leg down and then lead to all of these indicators sort of saying the bottom is in, are the sort of the ones that are still sort of holding out, then I imagine, you'd be looking at an S&P that's all the way down to like, say, 3,400 or something like that. But yeah, I would say the biggest catalyst for another leg down is just, the Fed remaining hawkish longer than people think they will.
Okay. Fair enough. Does Bitcoin react to geopolitical events? For example, the war in Ukraine broke out. Bitcoin didn't really seem to move dramatically on the day of the 24th of February. Remember that day? Gold did, but not Bitcoin. Does it react to, let's say, tensions in China or around China and Taiwan, for example, or perhaps the energy crisis that's brewing in Europe? How does this play out for Bitcoin?
I think ultimately a lot of it might not be directly related to it, but there could be a lot of indirect things associated with it. So like if energy, for instance, like the war in Ukraine and how energy prices were really soaring there for a while, that led to higher inflation, and that's going to lead to the Fed becoming hawkish. So it might not necessarily have a direct correlation or direct impact from it, but I do think there are ways that it can impact the price of Bitcoin. At the end of the day, I think that short-term price movements in the market are more akin to, say, like geometric Brownian motion, which is like a random walk. We can't really predict it that well. Okay. We can try to predict it, and oftentimes there are people that are much better at short-term movements. I think you've had a lot of them on your show that are much better at predicting short-term movements than I am. But I think in general, in a bear market, people just don't really care about the good news, and in a bull market, people just don't really care about the bad news. It's just we have a way of tuning those things out to where they don't really matter. So I think the overall thing is, markets have been in a bear market for a while, and they just don't really care so much about good news right now until the macro starts to look a little bit better.
I just want to touch on that point, then we'll move on to the ETH Merge. Ben, more philosophical question for you. If you're a random walk guy, if you think markets are Brownian, then I guess trading is not really a fruitful endeavor. I mean, what's the point in making short-term predictions or reading charts if everything is random?
So I don't really make short-term predictions because I don't think.
Well, not you, but just other people.
I mean, I think that other people probably could have methods that I am just not an expert at, or I'm not fully aware of. I mean, I do know that you can draw a line on a chart, and I often draw lines on a chart, and you can see them hitting resistance levels and whatnot. But sometimes they'll just break through that, and like the line doesn't really matter. So I would say in the short term, it's a random walk, but over longer periods of time, it becomes easier to predict. So I'm not a short-term trader myself. I sort of just try to scale into the market when I think the market is undervalued, like I think it is right now. And then I try to scale out of the market when I think it's overvalued, like I thought it was in early 2021.
There are some interesting valuation metrics I've seen online when it comes to Bitcoin or cryptocurrencies at large. The price to yield ratio, if you want to yield farm it, for example, would be one of them. If you stake it on certain platforms, the price to staking yield platform would be another one. Do these valuation metrics make sense? I mean, basically they're trying to apply traditional finance to cryptos when it comes to an income to price kind of metric. Does that rationale make sense in the crypto sphere?
I think there's all sorts of metrics you can look at, and some of them might make more sense than others. I haven't specifically looked at those metrics. I mean, I have looked at how Bitcoin compares to, say, other things besides its valuation against the US dollar. You could look at its valuation against, say, the money supply and how that affects things. And if you look at it against the money supply, we're already testing the 2019 all-time high of 14K if you account for M2. And I mean, there's all sorts of valuation metrics that you can look at, and even Bitcoin with respect to, say, the stock market as well, like the Nasdaq or the S&P. I think they all provide value, but I mean, they don't necessarily tell you exactly what's going to happen. And with regards to the ones that you mentioned, I have not previously looked at those, so I don't really have an educated opinion on them.
No problem, Ben. I just wanted to get your thoughts on valuations overall for the crypto sector. Let's move on to the ETH Merge now, which some people are saying is the most important event for cryptos since the birth of Bitcoin itself. How would you assess this statement?
I think it is a fairly big event. I mean, I don't think it's an understatement to say that it's an incredibly big event. This has been something that, I've been waiting for since since really 2017, because I thought it was going to be a lot sooner. I mean, I would have assumed that the merge would have happened years ago. And if you had told me back in, say, 2016 or 2015 that the merge would not happen until 2022, I would have thought you were crazy. But here we are in 2022. I do think it's a very important event for the entire crypto space, because if it goes according to plan, and there's no major hiccups, then I mean, I think it could provide a lot of confidence in the asset class as a whole at a time when we really need that. If you think about everything that's bad that's happened in crypto this year, with a lot of major companies really going down, and a lot of companies becoming insolvent. We saw what happened with the whole Luna fiasco as well. I think there's a lot of people that just simply do not trust cryptocurrency right now. And this is one of those things that make these bear markets so hard. Because it's really hard for a lot of investors to put money back into the market when they just simply do not trust a lot of these things. So I would say it's not an understatement to say it's a very important event. I mean, ETH is, in my opinion, it doesn't really have any major competitors. There are a lot of other layer ones, but I don't think that they necessarily compare to how much further ahead Ethereum is. I mean, Bitcoin and Ethereum are the two most decentralized protocols, massively decentralized protocols. And I don't think it's even close as to what the third one is. Bitcoin and Ethereum are well in front. So with Ethereum and the merge, it is a historic event. I mean, Ethereum is already up more than 2x from its local bottom. I think at like $800 to $900. It's gone up to around $2,000. So a lot of people are wondering, is it going to be a sell the news event? My general thinking on it is that, it will likely continue to show some strength, especially, I mean, the merge is still like a week away, from when we're recording this interview. So it probably will show some more strength, for a little bit longer. But my main concern is the Ether Bitcoin valuation. It is getting to fairly high levels. I think right now it's at about 0.085, so about 8.5%. If it starts flirting with, say, like the 10%, 11%, you're really looking at historic highs for Bitcoin. And I don't know, I imagine there's going to be a lot of liquidity at those levels.
We know about the benefits to efficiency and the reduction of the carbon footprints of the transition towards proof of stake, but what benefits really does proof of stake have for the investor?
I mean, I think if you have as long as you have a long-term outlook, I don't think it should make a huge difference. I think my best guess is that if you're an investor right now, you should at least have a 2 to 3 year time horizon. Like you need to be looking out till at least 2024, 2025, and not have any major short-term expectations. Ethereum has rallied now, I think about 128, 129% from its bottom. It also rallied 128, 129% at some point in 2018 too, and it still wasn't at its bottom. So if you're an investor and you're buying right now, you should be okay with potential downside risk, because we know if Bitcoin has another leg down, which there are some indicators that suggest that it could, not all of them, then you would expect another leg down for Ethereum as well. But as long as you're a long-term investor and you're just, say, slowly coming into the market over the span of 6 to 12 months or 2 years, then I don't really think you're that concerned about it.
One criticism of the ETH merge, if you want to call it a criticism, is that as staking and yield farming become more lucrative or attractive post-merge, big institutions, financial institutions or funds could pile into the space, making Ethereum less decentralized and more centralized. Is this a concern for you?
Yeah, that is something that, I've also been concerned with as well. I mean, proof of work, in my opinion, is I think it's superior to proof of stake in general, but I know not everyone agrees with that. And I mean, my general thoughts are I'm a huge Bitcoin bull. I'm a huge ETH bull. My main concern in the short term with Ethereum is, this transition. There's a lot of uncertainty associated with it, and as you said, I mean, could it become, could it go down this different route of being a bit more, not as decentralized? I think like the main concern I have right now is that there's so much uncertainty in this market in general that some of these major events, it only takes like one small thing to send the price plummeting back down. So that is, I would say that's the main thing I'd be worried about. With that said, I mean, even with the transition to proof of stake, I still think Ethereum is going to be a lot more decentralized than a lot of, its quote unquote competitors. And I think it's much further ahead. It's been working on a lot of these things for a long time, like roll-ups and whatnot for a long time. And I don't think that, I don't think it's going anywhere. And really the rally that you're seeing right now on Ether Bitcoin's pair, even though it might not be lived out, even though it might not last for many more weeks, I think it should be plenty evidence that it deserves a spot in a crypto portfolio. And actually, if you look at modern sorry if I'm going on a tangent here.
No, please.
I have there's this tool, there's modern portfolio theory. And, there exists a single portfolio which like maximizes your risk adjusted returns between Bitcoin and Ethereum. And so the Sharpe ratio for Bitcoin and ETH is maximized on the efficient frontier at about, I mean, you can see it right here, but it's about 70-30. So 70% Bitcoin, 30% Ethereum is where your risk adjusted returns are the most attractive. And if you wanted to minimize volatility going into the merge, like if you're a more risk averse investor and you don't want to have 30% ETH because you're worried that something catastrophic is going to happen, you could minimize your volatility of your portfolio by being 93% Bitcoin and 7% ETH. So really, it just depends on the type of investor you are. To give you an idea of how this looks, though, if you were to throw in like a random altcoin, do you care which altcoin I choose here? XRP, Litecoin?
Let's use Doge. Let's use Doge. Okay.
So if you were to throw in Doge on this chart, it'll show you something that you'll probably be more familiar with, this efficient frontier. This is like a Monte Carlo simulation of 100,000, or I think this is a 50,000 portfolios. So it does a sample and it figures out what is the most attractive from a risk management standpoint. And I mean, you can see in this situation, the Sharpe ratio is maximized with 60% Bitcoin, 28% ETH, and 13% Doge. But there's all sorts of nuances here as well, because if you're an investor, maybe you don't care about the Sharpe ratio, which punishes positive volatility. Maybe you care about the Sortino ratio, which doesn't punish positive volatility, and it'll give you a different result. So the whole idea that I try to tell people that follow me is that there's not really a right answer to what you should hold or what you should not hold or what your percentages should be. It's just, what is the risk you're willing to take and what type of volatility are you willing to experience?
Yeah, and just for the audience who may not be familiar, the Sharpe ratio calculates your your actual return over the market return divided by the volatility of the asset. Just on that point, Ben, it's been noted that Bitcoin has a higher Sharpe ratio, or in other words, a higher risk-adjusted return profile than certain assets like certain stocks or certain stock indices, certain traditional safe haven assets like gold. So just on the surface, it seems like Bitcoin is, just on this metric alone, in a way, a more safe asset than a safe haven like gold. Is that a sort of, that assumption, is that a little bit too far-fetched to make?
Well, I mean, for me personally, I own way more Bitcoin than gold.
Okay.
So that sort of gives you my answer. But I mean, you could also argue that the macro is changing a bit. So I'm not necessarily bearish on precious metals. I think that precious metals are likely poised to go up whenever the dollar stops rallying. Sure. Is kind of where I sit. I think that both gold and Bitcoin can go up whenever we get to that point. Yeah, hopefully that answers your question.
I just want to end on your note earlier. I want to come back to what you said about proof of stake versus proof of work. You favored proof of work in certain instances. Why?
I mean, I just think that I think it's a more decentralized. I think it's just more fair. I think. Okay. With proof of stake, you could have someone that just owns, a lot, right? And maybe they have a lot more voting power. I do think that proof of work has a lot more advantages. However, there are some concerns now. I mean, even I think today there were some current concerns coming out from the White House about all the the energy consumption and whatnot. I mean, I don't necessarily buy into all that stuff, but if the powers that be make this a big deal, then of course you could see you could certainly see the benefits of proof of stake. I'm not against proof of stake by any stretch of the imagination. I just think it's there's a big question mark as to how successful it will be.
Mm-hmm. And last question: the crypto trilemma, the issue of scalability, decentralization, and security, and the theory that only two of those things could ever be achieved at any one time. Is that something that one day could be overcome, you think?
Well, I mean, I think the Ethereum developers are trying to overcome it. And this is the thing that I think a lot of people lose sight of. Like, it's easy to create a layer one and pretend like you're so much faster because maybe you are, but you've given up a level of decentralization, right? Maybe you have great security and you're decentralized, but everything's really slow on the network. So the reason I like Ethereum so much more than the other layer ones is because it's trying to accomplish all three at the same time. Like, it's not willing to sacrifice high levels of decentralization so that the transaction fees come down, right? I mean, they could increase the block size, right? I mean, you could change that and the fees could come down. That's what a lot of other layer ones have done, right? I mean, it's not that complicated as to how you solve something like that. And I believe even like the Binance Smart Chain at one point started as a clone of Go Ethereum. And a lot of people, have used that as well, and because it's so much faster. But it's like, if it started as a clone of Go Ethereum, it's not that the developers of ETH can't accomplish all the same things that the people running these other layer ones have accomplished. It's that they refuse to sacrifice, that level of decentralization. So I do think they are trying to make progress on all three: decentralization, security, and scalability. Without compromising any of them. That's why it's taking so long. I mean, I'm a huge ETH bull. I think that it's going to do well. I hope that we see it hit $10,000 over the next few years. I just think that in the short term, post-merge, and if there is another leg down for Bitcoin, there could still be some negative volatility there. But I still think it's gonna ultimately rise and do pretty well. All
right. Well, I appreciate your deep dive today with us, Ben. And where can people find out more about your work?
So I have a YouTube channel. Just Google my name or YouTube my name, Benjamin Cowen, or my website's into the CryptoVerse.com. And I mainly just talk about risk management and using various tools to manage risk. And I have a whole indicator dashboard of managing risk and what is the risk on all sorts of things.
Your dashboard is very cool. I've browsed on it a little bit, and your analysis is very very interesting. Your background is a quant background. I'm just curious before we end the conversation. I'm just curious as to how you transitioned from engineering into the crypto space.
Yeah, so I started a YouTube channel in 2019, and I didn't really have any high hopes of it going anywhere. I got like 500 subscribers in 6 months, and then it took off when the bull market really started for crypto. So I essentially what happened is I've made a lot of money and I lost a lot of money in crypto on more than one occasion. And then I started to get better at it. And I wanted to try to show people back in 2019 that I thought there was a bull market coming. And I wanted people to be able to capitalize on it. And then they did. And, it sort of just one thing led to another. And then I was just spending all my time making content. And then ultimately I quit my job at the national lab that I'd spent forever to get. And now I just do this. So it was quite a transition.
All right. Well, best of luck, and I hope to speak to you again soon. Thanks, Ben.
Thanks.
And thank you for watching Kitco News. I'm David Lin.